Hey everybody, what's up? It's Booksy. Today is Sunday, November 13th, and this is going to be an update for AMC, and also I'm going to introduce something I'm calling the father of all charts. Yes, akin to the mother of all charts, but not exactly the same. So first of all, if you are paying attention, this weekend, Wakanda Forever opened to the highest ever November opening of all time, which is a big deal. So once again, we've had two record-breaking movies this year, which is significant because it signifies that the American public in general is not done going to the movies, and therefore it's really going to depend on who is positioned best to take advantage when the Hollywood slash movie industry recovers fully. And I think AMC is in a really good position for that. In terms of everything else going on this weekend, there's just a lot of negativity right now in general about the market. I think your bears are still bearish. They think that this is just a big bull trap, that it's going to, capitulate at some point and go the other direction. Lots of people noticing the gaps on the charts. This is nothing this is pretty basic stuff. When you have a gap, typically you're going to expect to fill it at some point. However, and I'm going to address this first, I'm going to tell you what I said on Discord and then also again on Twitter later, which is that the only time you fill a gap, right, is when there's a need for price discovery. In the case of the gap down here at 531, there is very little need for any price discovery at this point in time. In fact, a lot of folks were looking at $4.80, other folks were looking at $4, and so on and so forth. At some point, you have to say, well, where is the floor, right? Where is the floor? Because a lot of folks are saying this, some folks are saying that, yada, yada, yada. Well, I've been talking about it for quite a while, and I've been talking about the volume exhaustion on this most recent peak, and I've been talking about the clear and evident OBV divergence. I've been talking about that in the mother of all charts, and then I did a volume video a while back, and then I did a recap video that included a little bit of each in that. And everything involved in that, including what I call like the expanding iterations, the shrinking iterations, this being one right here, this is like A and this is like a little a. These are things that, while they're great to look at and they're important, I think, for identifying bottoms, which is why I was able to say this is a bottom right before it happened, while other people were saying, oh, that barcoding day was a sign of the times. It's just how these stocks are going to trade when there's no liquidity and this and that. I was saying, no, like this is really, really bullish. That's the way that you want to look at it. And it's important to recognize that while all of that's true, and while we can see all of those things happening simultaneously, there's always like multiple ways to look at a chart. And a lot of people, when they're looking at this chart, they're looking at it from it's going to continue to be bearish point of view, not, out of the realm of understanding. Obviously, we've been coming down since, June of 2021. And ultimately, even though there's been some pretty severe ups, there's been a lot of downs. And I get that. I really do. And I am very much a stickler for gap fills on AMC. There are a lot of gaps that need to be filled on AMC at any given point, and typically it does. It does a good job of going back over them. And if you leave a gap, they're going to probably come back within a few days or weeks to come back and get them. However, there are a couple different instances on AMC, specific instances on AMC where gaps are never filled and have yet to be filled. And those instances are right here. Back in 2020, going into 2021, there's a gap here on January 19th. There's a gap here on the Monday, gap up on January 25th. There's also a gap down here that was never filled. Actually, it was like January 27th. This one never completely filled. Then it gapped up again on the February 22nd, it looks like. Then there was another gap, after that on March 8th. And then there was even another gap back here in April around the 14th. Now, The reason that's super insignificant and the reason why they didn't go back and immediately fill those gaps, even though they came pretty close at times, you can see in some cases they would come back and basically tap the top of the gap and then leave it alone. Why would they do that? Well, in some ways, maybe you could look at it and say, well, it's kind of like a dangling carrot for the bears. You have to have a reason to have shorts continue to enter the play, because those supply, those who are offering the supply, meaning they're selling off, right? They're going to need some incentive to sell at different particular points, especially when we talk about quote unquote weak hands. And so during a markup phase, your composite EMU, if you will allow for gaps to be, chased after. What they won't do, though, is they won't compromise the integrity of the markup in order to fill a gap. And the main thing you need to think about when you think about those things is that once you've established a bottom, and once you've established a bottom, you start crossing what are called these creeks. Now, I'm going to draw it with a straight line. If you look at any kind of a Wyckoff schematic in the modern era, these are not typically drawn with a straight line, though they, sometimes they can be. But a creek is essentially like a price resistance, all right? And a price resistance is caused by new tops. So if you're going to draw a creek, right, you would look at where are the tops being created. So initially, perhaps right here, right, this was a very early creek right here. There's a price kind of resistance here. Every time you're sort of pushing up, you're not able to get over it. But then as you push up higher, you'll notice that as it crosses over the creek, it tends to come back and dip back beneath, wherever the next high is, and come back towards the previous creek. And then the same thing happens here, right? It creates another one. Up there's some price resistance. We break it, and you get a surge of volume, and then another one. You break it, and you get a surge of volume. And I want you to notice that after this point in time, right, it never comes back down beneath a certain level, because it can no longer come back down to fill that gap, especially like right here in this particular instance. You can see this is a pretty severe drop, and it does in fact look like it may breach this kind of minor creek. Well, it immediately recovers, right, and then it never comes back down, and it can't. If this were to break back beneath here, right, in this particular case, and come back to fill the 512, let's say on March 25th, you are now beneath essentially like a creek that you've already broken, okay? And so during a markup phase, the gaps will be left oftentimes, and they do not need to be filled. Now, of course, we all know that, eventually these particular gaps, specifically the ones from January going into June, which is basically from this time period, January 27th, all the way through really June 6th, but specifically the ones from that May run-up, a lot of those, if not all of them, have at this point been filled. However, where we are presently is a very, very important area, and this is one area that I think a lot of folks, I don't really know what it is about, maybe there's just something in the air, right? A lot of folks don't seem to think this is very significant right here. And we've been talking about how the shrinking iterations came down, they bounced off this specific point, right, and then dove beneath. And before that point in time, we were talking about 597. 597. 597 is the bottom. If you were to map this out with a Wyckoff schematic, 597 is your bottom. And it makes sense because, let me move this out of the way for just a second. It makes sense because if you look at the way in which this is making higher highs, and lower highs here, is that it's actually tracking very perfectly around 597, which not surprisingly is where we would have hit our support in the beginning of our phase B on the Wyckoff schematic for this bottom. That means that this initial dip, which is the thing that they needed to see, your operator needed to see in order to enlist them in a spring action. They can see that the bears were unable to find extra sellers. Look at the weak selling that occurred around October 10th. compared to everything else you've seen. The bears were very, very weak in pushing through this support. They did not gain a bunch of new sellers, and immediately, right, buyers bought it right up. So that tells a composite long, an operator, the emu, that it's time and that we're ready to spring. So the price gets driven back down. Majority of the volume is in the very beginning of the spring. It dries up in the middle, and then you get a ramp of volume. This is like textbook. And you get a ramp of volume coming out of the spring. And it confirms on the way out, right? It taps that 597 on the way out, and then it continues up. And it immediately does what? It immediately breaches and pushes over the recent creek, which I've got here in blue. At this point, you don't necessarily want to come back beneath the creek you just created unless the goal here is to what? Maybe come back and retest that 597. But ultimately, like, you're running right now. You want to see a ramp in volume. You maybe get a pullback to like this 580 or 680 to 650 area, something like that, before you go up. But really, you're going. Like, you've already pushed the creek up higher here. You had 2 really massive days, right? A little bit of ramping volume on those days, and you're gone. You cannot, from a Wyckoffean perspective, and yes, I am specifically, referring to how a lot of the folks are saying that we need to come back in gap fill. We need to come back in gap fill. No, you do not. In fact, coming back to gap fill would not only be detrimental, it would signal distribution to the sellers. It goes and flies in the face of everything that we just saw happen over the last 2 months. And by the way, they trapped a ton of shorts in here, right, by ramping this thing up very quickly and eradicating basically 2 months of trading on this bottom in 2 days. A month of trading in 2 days, which is crazy. And that's exactly what you want to see with a spring. And I've heard people say something like, you need a bigger flush than this. This isn't big enough. Well, maybe the volume isn't big enough, but there's definitely supporting evidence that this is done. This move is finished, and that it's not going to come back down. One really simple thing is what I'm showing you right here. This is the initial supply, right? The preliminary supply for the stock. This is the bottom. That's the range top. You SOS right around the top of the range. This becomes a preliminary supply. It's being tested right now. And not only that, but the levels in which that were hit, right, on the way down during this spring are identical to the levels that were hit in the final markup region, right, going into this markup right here off of this supply. Well, this got me to thinking, and I've been looking at this and thinking about how, like, all right, well, that's kind of a weird similarity, like the way these are coming into these ranges and such. And then, of course, all these people talking about a gap fill, and I'm like, well, look, if you gap fill, and I'm not saying it's not possible, I'm saying that I don't think it's likely, because everything else is pointing to this being like the bottom, and that we really can't come back beneath 597 again in an ideal situation. That's where we buy from now, right, as a long. So at this point in time, I don't think it's ever going to gap fill. Like, not until a markdown in like the way, way far future. Like when everyone's already out of this play, no one's talking about it anymore. Okay? I think what's most likely is that we're going to go ahead and see a move up to 15 at least, and then perhaps even beyond that, depending on which chart takes precedent in the days to come. But I definitely think we're going to at least come up to 15 on this next run. And beyond that, I think that there's a really strong case right now to be made that we are actually going to we are in a markup phase, basically. And like, regardless of what happens, we're not coming back beneath 597 again. So just to start, that's what I think about the gap. And I think that anyone suggesting you can come back down here and reaccumulate doesn't understand the significance of this preliminary supply and the fact that this is absolutely the support right here. And I think anyone who's saying that you can come down here and just chill out again and then come back up. They don't understand Wyckoff. They don't understand the logic behind it or the reasons why you wouldn't do that. And the reasons ultimately why like they didn't do that here, right? They don't come back down just to fill the gap. They don't care about it at that point. All right. And they're going to be very, very close to this at different points. And it's definitely going to be a dangling carrot for shorts. All right. So let's get to it. The father of all charts comes from this idea that I just talked about in looking, comparing this region to this region. And what I noticed is that there was kind of like an odd similarity between what I was observing happening here and what would just happen. And the first thing that kind of tipped me off was that, hey, there's a very clear like head and shoulder style move going on right here that leads to this particular bottom. And I was like, that's kind of weird because we also had a head and shoulder style move right here that led to this particular bottom. Okay, so what? Well, I looked back and I thought, if that's the case, maybe you could draw like a line from this top to this top, but there's definitely similarities there, right? I mean, you can see them. It's not even, unusual to think, okay, there could be. And I know other people have looked at this region and said, oh, that's the top, and this is this, and this is that. And these two tops have already been done. I actually don't think so. I don't think that this is a 1, 2, 3 in that way. I think it's 1, 2, and then perhaps 3. And this is very different from the mother of all charts. I'm not going to go over the mother of all charts. The mother of all charts has us running like really hard. And the truth is that either possibility is real. Like there's totally a real possibility either could happen because what? Because it depends on volume. It depends on how many sellers are still in the play. And those are things we don't have the answers for. But I can tell you this. When I started investigating and looking at this and started considering that, oh, that's kind of weird, like that we came up and went back down to hit that level and that these are very, very similar. In fact, I went and I started to mess with what I thought was sort of a congruency here. Now, before you like flip out, I just want you to notice the colored boxes, okay, coming down. And I want you to look very carefully at each of these trends. And I want you to notice how ridiculously similar they are, right? Like this is like a drop down, right, to a low. And then it comes up and it does a bounce out like four to five times. And this does the exact same thing right here. And it's on the same trend line. And then if you take parallel trends and you look at what's going on later, this also is very similar. You get kind of this hook motion that comes low. You get these cat ears, right? It's very similar. And then you drop down below it. And then, again, a hook, right? A really low spring. You come back, create cat ears, drop back below it, so on and so forth. That's not even the weirdest part about this, because then if you look carefully, you'll notice that, there is that thing, which everybody originally did think was this. And then we were like, well, that can't be January. That's what we all thought. That can't be January, right? It's not possible. Well, what if I told you that I think it actually is possible, and it might have more to do with how they're retesting certain lines and not so much how this initial setup went. Because the initial setup here made us think that this was going to break to the upside basically immediately. And then the rest of this was like complete and total off the wall nonsense. It didn't make any sense. I started looking at where were these actually hitting. Notice that the yellow, right? And you can see the yellow is respected in the same way on the way down as it is with this particular hit up. And this was the one we thought was going to be January. So if you look at the sequence of things, even though this comes really low and is humongous, this run up here hits that. And then where does it go? It goes from yellow all the way down to blue. Yellow all the way down to blue. And then where does it go? Blue all the way to green. Blue to green. And then where does it go? Well, now things start looking really different. But what's weird is that while it doesn't go blue to green, right? It does go, however, back to the same level. So kind of weird, right? Well, then I got to thinking, if the tops are all consistent, but the bottoms are not necessarily consistent, which seems to be the case, the next top could potentially be this particular move right here. And again, what's even weirder is that if you look from blue to green and then back down, this is that head and shoulder, which is what we just experienced. And that head and shoulder, by the way, is finished. I think this is another reason why I think a lot of people are not looking at this chart holistically. And I'm not trying to like bash anybody, but if you look at this particular angle that this bottom was set up at, hang on, if I can get it right here. It needs to be pretty accurate. If you look at this like 10 degrees or whatever, and then you go down and you drag the same thing down to the bottom, that's your head and shoulder finish, like it's done. So this particular trend coming down is the same. And if you just don't want to believe that, remember we know that this is an entire accumulation sequence right here, right? Which means that by definition, it's essentially just a gigantic M with double M's on either side. Okay, well, that's what we have here as well, is just a big M. So I do think that it's actually finished, and that if you look at it that way, you would maybe expect to see this mirroring outward, right, at the same angle that you see this guy. And what's interesting is that the current angle at which we're traveling, that 76 degrees, is in fact very, very similar, right, to the way this one was set up as well. I went back and I looked and I thought, well, there has to be something to that, right? I went back and I looked at this particular region and I looked at how it bounced out, and it came up in an S-curve and it hit a top. And that top doesn't seem to be anything specific at first. It actually looks like it breaks the top here, raises the canopy again, right? Raises the macro, we would call it like the macro creek, and then comes back down, reaccumulates, and goes. And it just comes back to retest the bottom that was established. And in this case, the bottom is right here, okay? It's at like 549. So it breaks out, comes back down, and this is your basically your range right here, right? This is the main part of your schematic, because this is your spring action. It retests it, and then it goes, and it SOSs, and it leaves. Okay. I went and looked at it, and I just started messing around with a lot of different things and started looking at, okay, well, where does that lie? So in the scheme of things, it makes a lot of sense if this ends up being correct, because this lies on an intersection right here of this particular uptrend, this 40-degree uptrend, which comes from the bottom at blue, which does the same thing right here, right? When you look at it and you look at the this particular bounce right here, there's a trend that's caught right there, and that's where it comes up to hit. And in addition to that, you can look and see like the way in which this comes about. There's a creek cross that occurs right here, right? And then they actually come back down again to like kind of retest that creek. And I was looking at how this maybe would have worked out in the past. If you take like a 50% marker, right? You can see it goes through like there. And you draw that 50% marker backwards, you can see that that's a really important trend line, right, that kind of cuts through it. Now, we don't exactly have that same trend here, but we do have this particular guy right here, and that's like a 50% cut from this intersection down to the bottom. What's even freakier, if you thought that wasn't weird enough, what's even weirder is if you take this guy and you measure down. Remember I said it was like 72 degrees? All right, well, in this case, it's like 72 degrees. And you measure from where we just hit, it actually matches perfectly the velocity that we would take on a mirroring if this were to mirror out. Again, this being the halfway point between the head and shoulders. If that's not weird enough, if you go from May to where we actually took off, you can see that roughly this is the center. This is like your 50%. It's this middle spire, right? It's this middle spire. And I want you to look at where these intersect. It's basically right on point. Now, I'm not going to sit here and say that it's like 100% perfect and without flaw. There are some things about it that are a little curious, but I went ahead and did the comparison. I looked at what's going on with the fractal in terms of like, hey, if this is the bigger guy, and we know that from the shrinking iteration, and this is the smaller guy, shouldn't there be a similarity to where this hit is, and if it's going to be like the macro move? And there is. You see this white line that comes down? Notice that where this breaks out, all right, this is like the 50% marker here. So like if you were to look at this guy and you said, okay, well, it's not exactly 50%, but it's pretty high, right? And it would have been 50% on the downtrend as it was at that time. Well, what's interesting is the top to the bottom here, you can see it cuts right through it. This is a highly respected trend on the downtrend. And the same exact thing occurs here. If you go from the top all the way back to the bottom, you can see that's the mark that cuts through it, and it leads you to the same spot. I went and looked at this particular region. I said, all right, let me do a yellow from the yellow down to that point. Let me do the green down to that point, just to investigate and see if it's similar. And not only is it similar, but it's, again, it's basically identical. This is the place in which you bounce across, right? You finally bounce out away from the white line, come back down and hit it. You can see that it obviously bounces off of the yellow, and then here you go. You have the same thing. You come down, right? You're respecting the others. You bounce across the white line, then you come back down and hit it, and you take off. Now, from this point forward, what happens next is going to be largely debatable, and I think that it's going to depend a lot on how high we go on this first push. If this first push ends up going to like $10 or something ridiculous, super high, that's going to tell you that it's probably going to be a very bullish future, right? Because you've now raised the next creek to a very, very high point. So no matter what the pullback, as long as you continue upward, the next creek is now much, much higher, and you're not likely to come back down. However, I did a lot of different things, right? And I know it's going to get a little bit crazy, so I'm going to actually get rid of a few things here. So I'm just kind of showing you, and also what's kind of weird is that if you look at top here, this particular point to that particular point, and you draw through, so if you take, for instance, if you take from here and you draw it through the blue, remember that the little bottom, the second bottom rather, not the blue bottom, that's over here, but through the second bottom, and then you take this point and you draw it through the second bottom. They actually intersect at like 350, 348 or something like that, which I believe is really, really close, if not right on the current bankruptcy value for the stock. So definitely like the short direction for it in terms of like where they were maybe wanted to go, but also really weird, I think, that it would be that precise. All right. So at this point, you're like, okay, cool. Well, this doesn't look anything like the other. It looks a lot slower. It is slower, but it's not like unreasonably slow. So the mother of all charts right here has it going up. And basically, I know it's like a huge mess. But the mother of all charts has it going up and essentially like hitting this point in time. And instead of coming back, it actually just comes back down, does an LPS, and then continues to run. That's essentially like the main point here. Forget that thing. Is that it comes up, it creates an LPS, and then it runs. Okay? And this is kind of an older version of it, but I've got other things where it would be like more sideways, to kind of look a little bit like this. And it would essentially just follow this trend up once it got to that point and just continue upward. Again, I've got more updated charts. I did it in the mother of all chart. This is a little bit of an older one. It's a copy, so it's outdated. The father of all charts is really different because it's basically taking this idea that I just showed you, which is kind of freaky, and saying, well, maybe that's where we hit. And the more, again, I investigated, the more I was kind of like, all right, this is a little bit bizarre how many things are intersecting right here, including, right, some very, very important trajectories. So this particular trajectory, which I just showed you, if you're leaving here at 72, and this is 72, and you're taking that back from that center point this particular trajectory intersects at the same exact spot that this trend line intersects, that particular region, which is not exactly like a coincidence. I think it's pretty obvious there's something to that. But it is, okay, fine, maybe it does, but it doesn't mean it rejects there. It could just like come back and LPS and go. Well, you're right. The thing is in this region, when you look back at where did this actually go, there's a lot of reasons I think that it went below here. Number one is it comes back to retest, all right, the bottom that was created. Number two is it's a 786 retrace. Number three, it's a creek retest down here, right? This is where your creek would have been. And there's so many other things, like little things that kind of line up. It's part of this, pennant that was created. There's just a lot. There was a lot of reasons like where you may have come back here. And those are not all reasons that may be relevant right now. They may not be, because this is not a pennant, right? Like you can't draw that. So that doesn't work. This isn't a downtrend. This was basically an SOS. So again, that doesn't really work. But again, the model of like we're going from here to here to here, right? And then back down to this particular level, and then back up to a particular level where we're right now, right? It's kind of weird. But maybe it goes all the way up to there and then back down to what? This particular level again, maybe the lows. Well, again, I did this and I was like, that's kind of spooky that also intersects that particular line. And then I was looking at, well, how would it kind of come out from the other side? And basically it just mirrors. From this point forward, and actually I don't have the line here, but they're all the same. So you basically have a perfect like symmetry, like up, down, up right here, where they're tracking the exact same, and to some degree this way as well, but they're essentially tracking the exact same trajectories, up here, down, and then back up. So I was like, well, I guess it could be fairly similar. And when I did that, this is where things get kind of spooky, right? When I did that, I was looking at, well, where would it hit bottom, right? So here's 597. Here's that, remember that trend line I drew earlier, that downtrend? There it is. Well, it turns out that intersecting that orange spot, remember, I use those trends here. There it is. There's the intersection. Here, let me put this on the other one so you can see it. All right. All right, so hitting the same exact spot that you hit over here. If you do that and you drop a mirroring trajectory, right? So 76 and 76, where it hits 597 again is also the intersection of this over here, which would make sense if you're trying to both retest the bottom and also mirror what you see on this side. Makes sense? And I'm like, that's kind of spooky. But then we look at this and we see, well, what happened over here when it got to the bottom? Well, it did one of those little bouncing bottom fractals, and then it did the extending accumulation, and then it took off when it finally crossed the next creek. I went and looked at what else is going on here, because it took off before that point. I was like, there must be something. Well, it was the high liquidity that really it kicked off of and created a gap up, and then it left. Well, that high liquidity zone in our time frame is a little bit different than where it is in the other one, right? It's actually pretty high up. It's over here. But I went ahead and did the mirroring, so I did like 75, 75, 75 to see what that would look like. And I added in some other things, such as this particular trend. Now, this one is kind of fascinating because the more that I stare at this, I'm like, well, it's kind of weird, because there's an earnings right here, and it happens to be right around March 3rd, and this trajectory would lend itself to a perfect time for an SOS. The more, again, you stare at it, the more you can kind of see there's also some things here that make a lot of sense as well. Number one is if you were to come up to this particular region, like about $15, $14.80, you're now going to have another creek, right? And this one is also going to come through this top. And so what I did is I took the yellow and went back down through the orange to see where would that be. It would need to be basically right above And there it is, because that's where you're going to have your SOS. Well, the orange guy, right, in this particular case, it pumps up, comes back down, and you can see here that where this pumps up and comes back down would be very similar, but it ultimately comes back and comes back right below, all right, where this was, essentially to retest the creek and whatever else. Well, of course, this trend would be here if that were the case, and you would have that kind of pullback. It just so happens that the way that this trajectory is set up, and you look at the way the trajectory worked over here, which is that it dipped beneath the trajectory from that bottom, and then it rode back up to it, right, about the same time that it hit its peak, which would be right around here. So if the peak is over here in this particular region, oh, I forgot about this too. This is also weird, right? Because that would make sense that you would come up to there and once again retest that top. Well, notice where this peak is, and of course, this in this case, the structure's right there. And then where is that in the scheme of things? Well, essentially, like that's your earnings call right here. And I'm not saying like it has to be like perfectly 1-to-1 or something. I am saying that it just so happens that that works really, really, really well with the March earnings and creates a pretty compelling bottom structure, because it would basically signify that this is indeed over, and that you're only ever going to come back to this point in time. And what happened here is that you came back at most, right? You came back and they hit a low down there, and then they came up with an ascending accumulation, and then they took off right at the highest. So that would be like going basically straight up right at that particular point in time. And then everything else would have to be roughly the same. So you're going to have to use your trajectories in the same way. Hang on a second. Mess that up somehow. Here, I'll fix it real quick. There we go. Oh, it changes depending on how you're looking at it. Now it looks all correct. Anyways, the point is, it's very, very aptly timed for that kind of a move right here. And it would create a pretty compelling and interesting bottom that makes a lot of sense compared to this particular markup. Now, I was like, well, if it goes that way, where would it have to go after this time? And again, it's sort of a question of how far does this first move go? I went and checked. Oh, you're going to like this. I went and checked what's the 50% of this move. And I looked at this and I went up here and I said, okay, where's the 50%? Okay, cool. It's right around there at like 680 or 860 something, right? And I went and checked and there it is. It's the same mark. So this would be a perfect place, if this is an S-curve up, to come back and retest. It's set up like brilliantly. Like the structure's there for it definitely to happen. Just like the mother of all charts, there's things here that I'm like, I'm not really sure if it needed to happen, because ultimately you could come back and just reaccumulate up here, and like that could be enough, you know, because technically there's other trends that it could catch on, right? And it doesn't necessarily have to come all the way back to retest the bottom for sure right here, but it could just be like an LPS and just go. And just like if it were the mother of all charts, you know, maybe it only ever comes back to here, to high liquidity, and comes back up. I don't know. All I know is that if you're doing the structure the way that it's done here, it's actually quite perfect. So like this particular structure here is basically identical in the way that it's being set up in the present time frame. A lot of really bizarre things like these intersections that would lead you to believe that January would be when you really start moving. And what's even weirder, and you guys are going to like this as well, is that intersection is the Monday the 19th. So all of those things are again coalescing around that time period of the 19th, which keeps coming up, by the way. So in conclusion, this is the father of all charts. This is a very different take on what could happen in the future. It's a much longer take on what could happen. And I think a lot of it, again, is going to largely depend on what happens in the next month. Basically, like, where do we hit a high here? If the creek is raised significantly, then it's very likely that you don't come back, right? If we just rocketed straight up to 15 all of a sudden, and our pullback was only like 10, and then we went up higher, I mean, it's going to be obvious that it's different. For the time being, what I'm really going to look for is I'm going to look at these really critical levels. Number one is I'm going to be looking at like, where does that 50% mark at? And that's around 850. And then number two is like, where is the highest liquidity zone area? And that, depending on if you're zoomed out or zoomed in, is different. If you're zoomed out, it's around 850, you know, about the same. If you're zoomed in, it's about 950. All right. And if you're zoomed way in, I think it's like 930 or something like that, depending on how you look at it. Point is there's two major spots. One is going to be, I think, 850. And then, yeah, I think after that point, you're basically like halfway there. You're going to go up to like 14. And this doesn't look like a particularly fast move, but that's only a month. So that's a month of traveling a pretty far, substantial different distance. That's a 190% move, which would be the biggest. It would also raise the creek, the macro creek. Everybody keeps saying that this thing is still stuck in a downtrend, and I get it. It hasn't made higher highs. I understand that, but what it's done is it's consistently pushed the creek out, like consistently. So this is your creek right now, and it is not a straight line. If you were to try to draw a straight line, it doesn't work, right? Well, that's weird. It's also really weird. More weird stuff. It's like right around that 50% mark. Anyways, it keeps raising it, right? And that's a sign that the stock, and it's widening. That's a sign that the stock is turning. And this would be the first low bottom, potentially, if this works out. So I'm calling it the father of all charts. It's a new thing. I don't like keep adding new things, but I couldn't ignore it. It was just something that was really compelling, very interesting. And I definitely think we have more than one schematic here of possibilities for how this thing decides to move. I think this is the slower move. I'm still taking the position that we are indeed going to mark up, but I think that it's in that phase right now, and I don't think we're going to come back down and get that gap, even though they'll use it and people will think that we're going to come back to get it. Like if it starts crashing right here, everyone's like, oh, it's going to go back and gap fill, make a lower low. I don't think it will. So at this point in time, I want to add one more thing here, and that is what's the upper price target on this? So Mother of All Charts has a pretty low price target. I've done it like 4 different times, and I came up with like $88. It was a really common number. It was coming up a lot in the schematics. And I was looking at, well, how do I figure out what this one would be? If this is a different all-around chart, right, it has to make sense. I did percentage differences from this point to this point, and it's pretty simple. I was like, okay, what if this is like how much they're marking up by each time, right? Oh, that's like 311%. That's pretty high, right? So you take that and you could move it up and say, oh, maybe 311%. It's like way over here or something. And it's again, it's a pretty substantial time if you try to keep it at the same range. But I was just looking at, well, where would 311% be if it happened to be like something around this time period? And there's some pretty high numbers that you can come up with. But one thing that was kind of fascinating was looking at this and saying, okay, well, what about the next trend up, right? Like, where does that go? Like, if you look back at the beginning, these are all possibilities for like how high you could go on these moves. It's much more significant in a lot of ways than some of the others. And the one that I came up with that I actually liked the best was this guy right here. This is like 120. Now that makes a lot of sense because I also had that on the Mother of All Charts. I had like 130. The reason why I think this is possible is that I went back and I looked at this bottom right here and I thought, well, what's the 50% mark, right? From here to here, from this top to this bottom. And I dropped a 50%. I took this guy, I ran it through it, and there it is. That's like the 50%. It makes a lot of sense because that's what gets hit right here on the way back up. So if you're slingshotting around, and this is like your bullish momentum, right? Like I'm coming out from this point, from this bottom on January 28th, heading up this direction, and I'm going whipsawing around stuff. Like where is it going? So I use this high, this low to find the 50% mark. Did the same thing over here from this high to this low. Which direction is it going? From this high, right, to this low, the next downward area. And then ultimately what I found is that there is, and then this trajectory, which was the one that was just really, again, very compelling, I think, to me, because it's been one that I've used quite a bit right here. And all of them intersect up here around like late March, mid to late March, and I don't know if it would actually move that fast. Maybe we're over exaggerating, but that 120 was pretty reasonable. That's what we originally had thought. If you had the charts together, it would have been like 220, which is higher than the mother of all charts, although it's different, right? It take longer to get there. I think there's evidence that would be probable, because the sooner you move, the less height you're going to get. The longer it takes, the more height you're going to get. Increases your P&F, point and figure bars count. So all that being said, brand new chart. Don't want to say right now one way or another which one I think is more likely, but I do think that this is very, very compelling in the way that this has moved and maneuvered on some particular levels. And then ultimately, like, if it were to happen, it makes a lot of sense. Like, there's just a lot of things that make sense here and, would work out. I don't necessarily know, again, the price target is going to be perfect, but I think that there's a lot of things that tell me that it could be much higher than the mother of all charts. It would just take longer to get there. So all that being said, I'm going to wrap it up. Hope you all have a good one, and I will talk to you later.